Welcome back, and let's check upon commodities now. But before that, there is information coming that the GSMMF, or the Gujarat Cooperative Milk Marketing Federation, which owns the Amul brand, has asked for a ban on oil meal exports. Remember, the oil meal exports from India have been high, and there is strong demand for it coming in from China as well. And that really has led to record high oil meal prices in India and in the international markets as well. The GSMMF has asked for this step to ensure adequate domestic supplies for dairy farmers, reeling under the impact of rising feed and fodder prices, as the drought has hit kharif crop in many parts of the country. There you have soybean prices on your screens, 2.5% of gain coming in for today as well, and ditto has been the case with the soy oil and the soy meal prices in 2012. Let's get in an expert then, and Viren Vakil, commodity consultant, Paradigm Commodities, now joins us from Ahmedabad. Viren, hi, welcome. Before we talk about other commodities, what's your thinking on the demand that has come in from Amul or other GSMMF?
Cattle feed markets are really under stress because of a drought story. Gujarat, which is a key contributor in milk, we are facing severe extreme drought, and many other parts, Rajasthan, Punjab, Haryana, are facing almost 60 to 70% rain deficit. So I think eventually government has to take some actions to ban or restrict exports.
Viren, what's your own sense on the soybean prices? Because they have doubled in last 1 year. We've seen record highs onto this one. We've seen soy meal prices at record highs as well. At these current levels, with some bit of a consolidation coming into prices, do you think it's yet another opportunity to buy, because there is a drought-like situation in many states?
I think really we might have formed a tentative top, but I think one final leg, one final up leg is still remain to be seen. And of course, I'm little bit bullish on near-term spot month contract, that is October contract. Safer strategy here would be long in October and short in December, or if aggressive trader, I would prefer plain vanilla long position in October.
Viren, which other agro-commodity would you be looking at? Because we've seen an immense run-up in case of sugar prices, for chana. Most of these spices also have run up quite strongly. Jeera has been a gainer as well. What's your sense in most of these agro-commodities?
Sugar, I am seeing slow and steady upside, volatile sideways. But I'm more comfortable in cotton, because I think here conditions are looking like a perfect storm, because Gujarat, the largest producer, is having extreme drought. Inventories are tighter, and I think end users are not fairly covered. I think many actual users are still to be covered. International market seems to be setting for a counterintuitive relief rally. So I think a vertical spike is on the card, especially in cotton bales.
Viren, what's your sense coming in for many of these non-agro commodities, especially the precious metal prices? Gold and silver today have seen a bit of a rebound. That's because the euro is firm. There are some promises coming in from ECB, or at least the sentiment seems to be positive. But would you buy into precious metals at these current levels?
I think we are in consolidation from pretty long time, almost a year, and biggest move normally originates from dull markets. Here I don't have clarity, but I think if I'm going to err, I would err to be on long side rather than on short side, since I'm expecting tail end risk shift to the upside. As I'm expecting too much liquidity going forward. So my bet, my first preference is to be long in silver, and secondary bet is for gold.
Viren, what's your sense coming in case of crude as well? Because we have seen good gains coming in for that, 6% up in last 2 trading sessions now. Do you think it can hold this rally? $92 holding for NYMEX, and nearly 110 and plus now for the Brent crude prices.
Crude, since last 3 to 4 months, I am not able to judge crude, and my 3 or 4 calls gone wrong. So I think let us left it as it is and switch over to other commodities where I am comfortable.
Viren, also coming back to agro, cotton has been something that has been rising. The acreage this time around is on the lower side. We've seen a good 10% of a rise coming in last 1 month itself. Are you looking at further gains from these current levels?
I think cotton would be the perfect storm commodity secular bull market because standing cotton crop in Gujarat, almost 60% crop is almost gone, and acreage was also very lower side. Inventories are hardly 7 to 8 lakh bales in Gujarat. So I think from the current level of 18,000, we may see cotton prices around 21,000, and in the next year before March we can see it around 25,000.
Viren, when we talked about the edible oil space, we really left out the CPO or the RMC. Both these products also have been rising continuously. What's your sense coming in for the whole sector, and do you have a strategy in any of these?
I'm pretty much comfortable in RMC, where I would prefer holding a long position with a partly progressive hedge of say 50 to 60% in the form of futures. I'm seeing a little bit correction maybe during Navratri, but real bull market in RMC I think would be in fourth quarter, because here inventories are quite low and demand supply equation is disproportionately in favor of super spike.
All right, Viren, thank you so much for joining us. So barring some patches of profit taking in agro space, it's a good time even now to buy them. There are drought situations coming in and the festive season, remember, is kicking in fast. With that, it's completely out of time on the FNO show, but handing it over to Neeraj and Tanvi.